So the consumer seems to be ignoring some of the weak economic data or the weakness that, for example, the banks are anticipating and many individual investors are anticipating. They continue to spend money. And it's interesting because, well, let's take a look at the first chart that we have here, which clearly shows that what I was going to say is interesting is that Canada has the highest household debt level to GDP of all the G7 nations. You see all the G7 nations listed there, and Canada has the highest debt to GDP out of all the nations. And I remember, I guess, a while back talking about Canada having basically spending about $1.60, and I'm not sure what that number is today, possibly the same or maybe even higher for every dollar that people make. So well in excess of what they're making. And we thought, analysts, investment advisors like myself, we all thought that we would see spending start to slow. But the most recent data has shown us that that's not the case. And I believe that one of the main reason why we're not seeing a slowdown in spending is that everybody who wants a job or anybody that wants a job can find one. There are more job openings for people than people looking for jobs, I should say. So when you have a lot of job openings, what you get is anyone who's looking for a job can find one. And those that are looking for a higher salary or higher pay are moving or changing jobs to find that higher pay, which is also lending itself or one of the reasons why we're seeing wage inflation both in Canada and the U.S. And wage inflation can be quite sticky. So we're seeing a lot more debt here in our country. We are seeing the average person continue to spend money, however, because they have a job, because they maybe had an increase in pay, perhaps because they still have some money left over from back in the pandemic days where they received money from the government for their business. So a lot of reasons why the consumer is still spending. But make no mistake about it, we're seeing credit card levels start to rise. Visa levels or payments are starting to rise. And that is another reason why a lot of the financial institutions have increased loan loss provisions, set aside more money for bad debt, for debts that individuals cannot make payment on. So overall, are investors being silly? I'm not so sure. I guess it just depends on the investor or the consumer. Is the consumer being silly with how they're spending their money? I'm not so sure they're being silly either. I guess it all comes down to, do they have a job? Is that job paying them well? What are their expenses, other expenses? You know, what's their mortgage payments like? What's their line of credit like if they have one? So overall, the average retailer or person will continue to spend, in my opinion, as long as they have money coming in. And so we'll definitely keep track of what's happening in that regard. But overall, this continues to power the economy ahead and at least keep us from falling into a mild recession.